Good evening, all. Ira Epstein of Linn Associates with your evening wrap-up for this Tuesday, and this is the financial wrap-up for Tuesday, and we are now at June 8th, 2021. I appreciate when some of you say you got your day wrong, your commentary was right. I don't have anything in the background here. It's just a camera, me, lights, and away we go. So there's nothing to tell me the date or the time. I have to look over, and I've got so many monitors back there, but they're small print from where I stand. It's hard. You make your guess. Now, before we get involved with the wrap-up, let's do this. I want to remind you that tomorrow is Wednesday, June 9th, and I'm going to be holding my What's Up live webinar. It is where you're invited for free to come in. We talk charts, 15 to 20 minutes. I limit it to that. It's like a rapid fire section, and that's it. When I see it's dying off, I just end it. So it is intended to be fast-paced. I do not record it and post it on a website. You can ask anything on the futures market, spiders, ETFs, stock market. If I can bring up the chart, if you bring me the symbol, and my charting software should bring it up, away we go. And I'm going to try to be fast with it, bring up as much data as I can for you, and we'll discuss what to do. And we can discuss daily, weekly charts, different trade ideas you might have on them, but that's where we're at on it. If you didn't get my invite already, it's because you're not on my mailing list. Therefore, there's a way around it. You can either call my staff, they'll get you all set up at 973-2077, a toll-free of 866, or just click here if you're watching me on YouTube. This link that you're seeing up there is going to take you to the sign-up page, and then it'll give you your password and user ID to get in. I'll open the room up at 12:20 p.m., and I start sharply, 12:30 p.m., Daylight Savings Time, Central Time. That's what time we begin. All right, so let's talk the market because it's still been a very interesting market. Now, I was watching today Tom Keene on Bloomberg, and he's so right. It's like the volatility's come out of the market, and he is dead accurate in that. Not every day's super volatility. Do we have a lot going on right now? Well, there's a battle, and the battle's on the interest rate sector. Instead of being and approaching the 1.7, 1.75 number on a 10-year note, we're at the 1.53. If we get under 1.5, I don't remember the last time we did that. I'd have to go back on the charts and look at it. Another powerhouse has been energies. The energy market is saying OPEC has control of this market. U.S. isn't producing that much more. The EIA came out this afternoon and said they're raising their price forecast for 2021 as a whole, up $3 a barrel in WTI from 58 and a fraction to 61 and a fraction now. Grain market's going to be stuck in watching one thing, weather patterns over the next 2 weeks, going to be very important. You broke down hard in Bitcoin and you got to bounce. But let's take a look at the charts. You're up for the week 35 handles, as we call it. Why they came up with the word a handle, I don't know, but when they started trading S&Ps, that's what we called it. And that's 35 points for the week, 0.84%. And as you can see, you're right by an all-time high close. You're not there yet, but you're close to it. We have to get to Friday to see if it can do it. When you come to a regular daily bar chart, I think you'd agree with me. This is your resistance point. You're in it. What you're going to do from here? Well, we try to figure that out. The trend? What is the trend? At the moment, it's up. Why? You have to be able to answer why, not just look at a picture without something, oh, well, that's an uptrend. I can see it. Well, why is it an uptrend? Definition of an uptrend is higher lows, higher highs. If you look at the swing line, you have that, higher lows and higher highs. If you don't know how to plot a swing line, we have a charting course on our website under education that explains it. So the trend is up. What will break this pattern? Taking out 42.0575, what it will do is you will not have that outside day up intact. If you take out the low of an outside day up, this is my own rule. Doesn't mean that it's going to work for you, but I'll give you my rule of thumb. That means prices are going to go down to the closest main moving average or Bollinger Band, the closer of the two. When I put on moving averages, that would put it at 41.8572. And that would break this pattern a little bit because then you can't say that you've got that higher lows. You now would have a different pattern that would change on you. And I'd show you that if it happens. Where's the resistance? Right here. You have a market that is now markedly going sideways. So is this going to form a top or a bottom is the big question that traders are going to be asking. And they're going to be asking it for a while because I don't see anything on the immediate horizon taking it out of it. We get the European Central Bank meeting, I think it's Wednesday or Thursday. Next week we get our FOMC meeting. But why would the Fed do anything? If you saw the Jolt jobs data this afternoon, it was terrible. You went up another 1 million jobs on the help wanted indexes. Okay, people aren't taking these jobs. And you've already seen with the employment number what's going on. It's a gradual, I'm going to get back to work. And a lot of you don't agree with me. You make fun. You'll say to me, well, Ira, I bet you don't live on $500 a week. It's not what the point is. I lived on less than that. I lived on a hot plate to learn this business in an office with no air conditioning at night in the dead of summer. So I paid my dues when I was a young man for a long time. I know what it is not to have, and I know what it is to have, and I always pay attention. And my point to this is those people that are making their $600 with the two parts are saying, okay, as that ends, I've got to go back to work. But until then, instead of breaking my back, being on my feet all these hours, that's it. What's the areas where they have these jobs? Hospitality of one form or the other. That seems to be where all the jobs are right now. But if you take that out, and that's what we're talking, then I can see the argument there. If you don't take it out, today's low, and you're going to move up, then the 42.53 1/4 area, the upper Bollinger Band, looks like resistance. You have an embedded reading. Until that's lost, even if you take out that low of today, until that red line closes under 79, I'm like this. Okay, have a good time. Play your games. Yeah. Until that momentum's gone, the momentum is saying the market still is wanting to go up. That's my viewpoint on the market. In the NASDAQ, you have the embedded reading. I'm in the bull camp. Doesn't that sound like a song? Lower low, higher high, resistance up at the 1390, 620 area, right in that, actually closer to 13,963. Yeah, you can say that. In the Dow, overbought, not embedded yet. You need 3 days in a row of closes over 80. So you can't count Wednesday. Tuesday, both numbers over 80. Monday, and what about Friday? Didn't have it. So tomorrow that can join the parade. So we have to see, will it? So the other two to me are stronger markets than this. Looking more interesting to me. And the Russell's the strongest of the group. It's already fighting the upper Bollinger Band from an embedded reading. And we talked about that. I had told my traders I thought this was the strongest. And it is at this point. Then we get to the VIX. Now the VIX had an interesting day. It flip-flopped. It's still not getting down to the 1478 reading. But for those of you that are paid subscribers in my morning video, tell me where that window envelope is. Duh. And that's what did that. Now, if you take out today's low, then I think tomorrow or the day after, so Wednesday or Thursday, then I think you're going to get people that write puts at that 1478 level or wherever that band is, looking for the market to get back up to the 1875 or wherever the 18-day average comes in. I see two types of plays there. Very interesting. Bond market, you're in serious resistance. You're at the combination of the upper Bollinger Band and the 100-day average. I don't see the market easily getting through this. I think it's getting long in the tooth. I'd be a bit cautious. Same thing in the 10-year note. Overbought, uptrend into key resistance, those two numbers. I think the pros are taking money off the table there. The dollar index, the trend is still up. Higher lows, higher highs. Momentum is flat. Here's what can happen. As long as you don't take out 89.90 wherever this Bollinger Band drops down to, will be a resistance. The negative of this is should you take out 89.90 get through that, then I think you're going to wherever the lower band is. Why? You'd have lower highs, lower lows, momentum's not against it, and the bias would be down. A flip-flop day tomorrow. What about the euro? Flip-flop day. It's just a mirror image. You're in a downtrend, tight. If you take out 122.04, you then have a higher high, higher low over the 18-day average. Not as pretty as the fact that momentum here is still pointing down. So not as pretty and a bit more dangerous. Why? Because we don't know what the European Central Bank is going to say to us. I think it's Thursday, so I want to see that. British pound neutralizing itself. There isn't much juice in here to play for is now the problem. If you think about it, it just got over a 1.25 points from top to bottom. I think the smart money's going sideways on it. Bitcoin, is that close enough to say cover shorts? The first challenge of a lower Bollinger Band is where you do that. I admit it didn't quite hit it. It got down on Tuesday to within, let's see, $125 or so of that number. That's close enough, folks. You're already knocking on the door of oversold with the 27 reading. So if you get a bounce here, it's fully expected. If you want to hit it, c'est la vie. The work has worked beautifully, the chart action. Lower highs, lower lows, keeping you under the 18-day average, the bias, learn charting. Brent, WTI crude, still the narrowness. Look at how they're coming together. They don't stop. That I'm surprised on. Here's the Brent holding up with an embedded reading. Am I even thinking bearish? No. I'd rather be the highest buy on a chart like this and get stopped out than be the guy trying to sell it all the way up here. It can't do that and you're getting annihilated. No, no. You want to be with trends. WTI crude. This is, I said, the highest closing price now since 2018. Market's still in an uptrend. I applauded it today because my morning subscribers had to love when I got very bold and I said, at the market. And I wrote to all my written subscribers, same thing, you got to make your move. They made it, and as it worked out, cashing in out a chunk of it already. So you like those type of plays. Does it always work like that? Remember what I told you. Look at my skin. I'm like Swiss cheese. I've had plenty of holes through me. In the rebob gas, I still think a lot higher. A lot. You're not hearing me say slightly higher. I think there's a lot left in this market. I think that you're going to be surprised at how strong the driving season is in America. So that's what I'm looking at. Embedded reading, still saying to me until you lose that reading that it wants to go higher. We'll talk about this and a lot more as you bring your questions to me tomorrow in our live webinar at 12:30. I'll open the gates for it at 12:20 p.m. Click here if you want to attend. Sign up for it, but don't sign up if you're not attending. We have a way then to stop you from other of the webinars. Those that want to take a seat, do so, but we have limited seating. That's why we do that. I'm Ira. You have a good day.